Welcome to this tutorial on how margin works on Schwab. Margin is a key concept in investing that allows you to borrow money from your brokerage firm to purchase securities. In this guide, we will walk you through the process of using margin on Schwab, including key concepts, practical examples, and best practices. First, it is essential to understand what margin is. Margin is the amount of money you borrow from your brokerage firm to purchase securities. When you buy on margin, you are essentially using borrowed money to invest in the market. Schwab, like other brokerage firms, offers margin accounts that allow you to borrow money to invest in stocks, options, and other securities. To use margin on Schwab, you need to have a margin account. To open a margin account, you need to apply for one and meet the firm's eligibility requirements. Once your account is approved, you can start using margin to invest in the market. The next step is to understand how margin works. When you buy on margin, you are required to deposit a portion of the purchase price, known as the margin requirement. The margin requirement varies depending on the type of security you are purchasing. For example, the margin requirement for stocks is typically 50%, which means you need to deposit at least 50% of the purchase price. For instance, if you want to buy 100 shares of stock XYZ at $50 per share, the total cost would be $5,000. If the margin requirement is 50%, you would need to deposit at least $2,500. And Schwab would lend you the remaining $2,500. It is essential to understand that using margin involves risks. If the value of your securities declines, you may be required to deposit more money or sell some of your securities to meet the margin requirement. This is known as a margin call. To avoid margin calls, it is crucial to monitor your account regularly and maintain sufficient equity in your account. Best practices for using margin on Schwab include borrowing only what you need, monitoring your account regularly, and maintaining a cash reserve to meet potential margin calls. It is also essential to understand the interest rates and fees associated with margin borrowing and to factor them into your investment decisions. In conclusion, using margin on Schwab can be a powerful tool for investors, but it requires a thorough understanding of the process and the risks involved. By following the steps outlined in this guide and practicing good risk management, you can use margin to enhance your investment returns and achieve your financial goals.